Welcome back, guys. It's Sunday afternoon, and good afternoon. No, yeah, good afternoon. I hope this was a great weekend. Well, sorry, this video did not get to you as early as possible, but I'm very sure you can still make use of the information I'm going to provide for you guys. So, this video is titled "Weekly Market Review and Journal," meaning that this is I'm doing this video to review the weekly market and to show what I'm expecting from the weekly perspective, and whatever I say here now is going to guide us throughout the week. So we since it is going to guide us through almost 5 days of 5 trading days, so we need to look at our charts, observe things critically from different point of views in order to come to a certain conclusion. So that being said, I really did a great deep dive into the market this weekend, right? So and I've come up with so many things, but there are not much. There might not be much, but I've come up with so many things about the market and how you know I I even to the point that I have a weekly projection. That is, I know what kind of weekly profile I'm expecting. That doesn't mean that it's going to give me exactly that same weekly profile, but if it's really effective, then I'm supposed to have such. Sorry. So that then there is an importance to see such a weekly view. So that being said, that has drive me to this following conclusion, which I'm going to state, then I'm going to explain. All right. So the Euro US dollar weekly contract for first week of February, which is this past week, which is this particular candle. I'm referring to the weeks that has finished, not the week that is going to come up. The first week of February 2024 deliver an indecisive candle, leaving a longer wick lower, which also is a sign of bullish pin bar and also led to the formation of weekly fair value gap or CB. Now, meaning that this particular candle deliver efficiency is bullish pin bar, and to my retail traders or those that trade with such myopic perspective, um, that doesn't mean that they're not profitable, right? That means they are profitable, and um, I am going to state that the narrative behind this kind of candle is is very important as well. But now, with the help of this concept, which is ICT, we can now know when this kind of candle is highly, what I mean by is highly effective, meaning that such this is the inverted part of this candle, right? So if this kind of candle forms somewhere here, then we know it is effective, but not somewhere here, right? Okay, not somewhere here, not somewhere here. And also we are going to look at the narrative behind the formation of that candle. So after taking out those things, you will now know that this is going to be a higher probability uh, candle, whether it's mm, the, um, uh, three bar pattern, also so many kind of patterns. But it is not that they don't work, they work, but they work in some certain instance, and you have to be able to know those instances. I'm going to waste much of our time on this particular time frame because yeah, we're dealing with this time frame, and I'm going to, since if you want to know about the Monday, like the daily bias, you can go and watch my previous day my Friday content, which is Friday, which is um 9, right? Yeah. on 9. So if you go on my YouTube channel, you're going to see. Let's continue. On the weekly chart, we can see that there is an equal low resting on the monthly fair value gap or BC, which is another factor that might lead to a short-term rally higher on euro, but overall it is bearish. Now, what I mean by that statement is that on the weekly, we see that this particular candle low and this low is relatively equal, although this low is lower than this with a tick, but they are relatively equal, and that might be another reason why price need to come and sweep that low. And let's, for example, if we did price into the consequent encroachment of this monthly fair value gap, then we might expect maybe a short time rally higher in price. And also, if um if we don't have this relative equal low, then and we have this fair value gap, then we can see that the fair value gap will be effective. And if at all this is an inversion fair value gap, definitely I'm going to be a long in bias, because to be honest with you, I've been working with this market. I've been doing this thing every day for the for 1 year now complete, and I have come to realize that inversion fair value gap are more effective than the normal fair value gap. I don't know, but that is just it for me. Well, casting forward, I am anticipating for the ICT weekly fair value gap or CB to act as a resistance to deliver the market lower, and also we are likely to have a weekly fair value gap high to be tapped or sweep above it, but not to see the market close above it. And if it did close above it, that indicates a short time or long time change in the direction of the market, meaning that on meaning that casting forward, I want to look at this fair value gap to act as a resistance. That means to lead the short time price delivery lower. And I am open to see the new week candle. The week of the candle to go above this line, which is the weekly fair value gap high. Like I stated, it is permissible because of so many factors. But if we did not pass above it, that means we are going to have um, an institutional order flow entry drill. Now, the weekly profile is an obvious tool. Now, if we go on a daily time frame, we're going to explain this more, which is we're going to explain the weekly profile more. Then, okay, so that's being said, let's go to the euro or the DXY. Sorry. All right, this is the XY weekly contract, and on the XY weekly contract, we can see they are practically almost the same. We have a fair value gap, and an added context, we have a volume imbalance, and we already swept above a PDRA, which is an order block, and I'm anticipating this order block to be used as a support now. It was a resistance before. I want it to act as a support. So if you have the mindset of support and resistance trader, so since this was a support, um, since this was a resistance before, now it should act as a support, right? So that it will lead to a creation of a new weak um, swing low. If you look after this swing low, there have not been a new swing low on the weekly price. And for the market to efficiently distribute, there should be a subsequent swing low form, so that or swing low or swing high, so that will engineer the liquidity in those areas, and it will attract the market later on. Alright. What I mean by that is this. Let me explain something. If market is moving like this, create a new swing low, move higher, create a new swing low, move higher. Now there are instances where you will see the market, instead of it creating a new swing low, it will come back and take this one like this before continuing. And if you observe, most of the time when the market take a new swing low, if it's going higher, when the market take a new swing low, it tends to move more faster than than the normal uh, movement, right? Than the normal range, it tends to move more faster. That is how our smart money position themselves for an impulsive move in price. If you know all these things, you will now know when to expect an impulsive move on price or when not to anticipate for such move. All right. So that is it basically. We can see this a week here, and also we can also call this a weekly order block, which is a bearish order block above here, but we've not tap on it. So maybe if we price and tap on it next week, it might lead to a bearish bias on Friday, right? That is the Friday candle. So I will go down to the daily now on the XY. So I will explain the XY before Euro. So that is it basically. I will explain the XY now. This is Euro daily contract. Sorry, the XY daily contract. I want us to study this area. Don't forget about every other thing that has happened before. Let's look at this particular. Okay, let me say this volume imbalance has already separated us. So let's look at this whole price. Now, what can you see in price? We have accumulation. No, yeah, let me say we have consolidation, expansion, retracement, and expansion. So basically, what that means is that we were on a range in market, right? And this range we swept liquidity. Okay, let's say we swept this equal lows, then price higher. Then we are going to retrace into any bullish breaker, right, to deliver higher prices. And this is why I support higher move on this market. Now this is the consolidation zone, right? And this leg, this particular leg sets the sweep on this liquidity, meaning this leg, right? This is the consolidation area. This whole area like this is the consolidation. I'm basically teaching, right? I'm basically teaching because if I said I just want to do my weekly review. This is what the weekly review meant for. So if you have something like this is the consolidation. We have a sweep of liquidity. Now we have expansion, retracement, and expansion. But I'm not expecting expansion. I'm not expecting to see a manipulation, then reversal, right? A manipulation and reversal. Or I'm not expecting expansion reversal. There's nothing like that. It is always expansion, retracement, or reversal now. But there's nothing like expansion, retracement, and consolidation. So that is it basically. Uh, I just want to explain that to give you more insight about how I understand this market, right? And how ICT taught it. I might not be as good as ICT, so that is why I like to use the phrase how I understand the market. Because if I'm going to say how ICT taught it, maybe some of the concepts I am misplacing them and I would not know. But over time, how I have understand this market is the way I am, putting you guys through about what I'm actually looking out for and what is important to my attention. Now, this is something I want to add on here on the XY. So basically, I'm going to talk more on this daily contract. If I cannot go on a lower contract, please do yourself a favor and go and watch my Friday market review. I think that explains a whole lot more concept on this. Now, we have already seen the manipulation. That is why I put this particular something here. We see a manipulation that takes this relative equal low, equal highs, and which leads to the distribution of market lower. Now, as we distribute lower, we're going to retrace, and if we retrace, this is a bearish order block, right? This is the daily bread and sugar block. We tap on it, we're going to distribute. And now this is why I support an institutional based entry drill on 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 euro. Now let me read that thing for you guys again. The weekly profile is an obvious Tuesday 6th of February 2024 up close candle as the low of the week that tap on the monthly fair value gap or PC, which also sets the leg for a higher price delivery. Now, what I'm explaining is that this particular candle is the Tuesday candle, February 6th, 2024 candle that is the low of this past week. And it's set after this low is created, it set the leg for a continuous higher prices. On that is every day we are going in to look for higher prices, right? So that is it basically, and it also taps on this monthly fair value gap and also form a relative equal low with this particular market, with this particular candle. And basic and I would like to add, sorry, the high of the week is formed on Friday up close candle that creates the weekly fair value gap, meaning this candle formed the high of the week. Although this Monday has the greatest expansion on this week. Why? The highest expansion occur on Monday, which is obvious, right? I wasn't expecting it to have this expansion on Monday, right? Because the Monday did not have any news, but because of the energetic move and the willingness for price to sweep the liquidity that is lying below, that is what led this sharp move, right? Because if the market maker is interested, or let me say, if the algorithm is interested in the liquidity below, there is a higher chance of seeing it coming down to that area. So basically, this is a bearish order block on the daily, and this line represents the mid threshold of that order block, which is the midpoint of this order block, and this is the high of the week. Why there's a I don't know. There is something that makes me feel like the week is not that the body of the candle. The week of next week candle should is likely to pass above this blue line. But if we did not pass above this blue line, which is the weekly fair value gap high, right? Or yes, or CB, the high, this is the low, and this is the high. So if this is the high, so if we did not pass through it, we might see the consequent encroachment of that week, and that will indicate an institutional order flow entry trail. Okay, that's it basically. Let's go to the 4 hour. And there is something I want to add. I have only 2 minutes. Rather, instead of talking and explaining things, I will rather read that thing out because it's very important. Added concept for next week. Due to the daily chart and all the price charts, this really indicate or show that there is a much willingness in price to go lower, plus the daily PD array that support the bearish bias, which might be very much harder for the algorithm to push through it and deliver bullish in next week candle. Now, it is important to note that there is a possibility to have a bullish candle on daily, that is any of the day to be bullish candle, even though the weekly is going to have a bearish profile. Now, to add to this, we have a 4 hour fair value gap or CB, which might definitely lead the bearish week, and this implies an institutional order flow entry drill. That is, if that's why I come all the way to 4 hour. If we definitely respect this line, this particular 4 hour bearish order block, this might set the leg for an institutional order flow entry drill. So with this, I think I have come to the end of this video. If you really want to know and go deeper on this, you can check my Friday content, which is 9th of February 2022. Then you're going to learn from there as well. So thank you so much. Please do subscribe and like this video, comment